GM, good morning. Welcome to the Milk Road Show, the daily crypto show where investment insights are hotter than a jalapeno dipped in lava. I'm your host, Jay Hamilton, and after the first full day of trading, the ETH ETF did 1 billion in volume. That's about 20% of what the Bitcoin ETF did on its first day, which is a great start. And this week, we've got daily episodes to build your investment thesis for ETH, so you can confidently explain to your wife or your husband why ETH is one of the largest holdings in your portfolio. Here to guide us today is the nicest guy in crypto, Zeneca, who first bought ETH at $100. Welcome back to the show. What's your reaction to the first day of the ETH ETF trading?
I'm pleasantly surprised. I think I was expecting it to do well, but I think it's come out of the gate better than I and probably a lot of other people expected. Obviously, there's a lot of numbers on the screen right now, but as you mentioned, 1.1 billion in volume is great. The most important thing, though, to look at is like the total inflows, which I'm sure we'll get into later. But generally speaking, bullish, good stuff. Obviously, price action is not quite corresponding to that. But I think even last week we were talking about how, short term anything can happen. You look at what happened with Bitcoin and it kind of crashed a lot and then took a few days to recover. The global macro markets are kind of taking a tanking today, so prices are down across the board. I'm pretty happy with how the ETF launched and is going so far, and I'm pretty optimistic about the next few weeks.
You mentioned it's most important to look at inflows versus volume. And I think a lot of people get this wrong. We actually put out a tweet, Milk Road put out a tweet this morning saying that the ETH ETF's volume was 1 billion, not the inflows. And there's a big difference here. And I think a lot of people are confused about this. Can you just explain inflows, outflows, and volume for everyone?
Yeah, so volume is basically the aggregate of all the buys and sells. So like someone does 100 million of buying of the ETH ETFs and someone else does 100 million of selling, the net impact is zero, right? There's no actual impact there. Someone buys the same amount as someone sells, but the volume will show 200 million because there's been 100 million in buys, 100 million in sales. Where the total flows is important is because that tells you what the difference is between the buys and the sells. So if you have 100 million in buys and only 50 million in sales, then the net inflow is plus 50 million, which is good for ETH because it's buy pressure towards ETH. The reason, I mean, a lot of people ask why were there outflows on day one? The reason being is that Grayscale has an Ethereum trust, and they've had this for I think a few years now, which has basically been a way for people to get ETH exposure on the stock market before these ETFs existed. Except the problem with it is that they were charging and still are charging 2.5% fees compared to all the ETFs that have like 0.1%, 0.15% fees. And so basically, everyone who held this Grayscale trust, or a lot of them, are going, hey, I'm going to sell out of this and you imagine buy the other ETFs, reduce my fees. And so if you look at this chart, they're all inflows except for Grayscale, which had 484 million in outflows, and everyone else had inflows. And so the positive thing to take away from this is even though there are $500 million of outflows from Grayscale's trust, people were selling, there was enough buy pressure in the other, I think, 8 combined ETFs that there was still a net positive day. And the even more, I guess, positive thing to think about when you're looking at this is that there's a limited amount of money in this Grayscale trust that's charging 2.5% fees. Once people have sold all of it out of there, that
Mhm.
selling pressure disappears, and then it's basically largely going to be net inflows, which is basically what we saw with Bitcoin. And then it's up to like regular market fluctuations. But I think once this whole Grayscale overhang disappears, we'll have more of an organic picture of the ETF flows and volume. Right now, it's a lot of people selling out of one and buying into another.
The Grayscale ETH trust had 485 million roughly in outflows
Hmm.
yesterday, which made the net flow only 100 million
Hmm.
in day one for total ETH ETF because so much. But if you were to remove that,
Mm.
then the total inflows would have been closer to 600 million,
Yes, correct.
which is super positive because what you're saying is these outflows from ETH, from this Grayscale Ethereum trust, they have an end. This isn't going to go
Yes.
forever. If we were to look back at, as you said, Bitcoin, Grayscale also had a Bitcoin trust that was very similar. I feel like we could just copy and paste what happened there to what happened here. Can you give us any idea of what happened with Bitcoin and like what we maybe can expect here?
Yeah, so the Bitcoin one was similar but slightly different in the sense that uh, so there's a dynamic at play where the trust was trading at a price that was less than the Bitcoin price, and so basically, if you were to redeem your let's say Grayscale Bitcoin 2 months prior to the ETF launching, you wouldn't get your full Bitcoin worth of financial value out of it. You'd be taking a haircut, and so people didn't want to do that, and so they waited until that sort of equilibrium balanced out, which was around the time of launch, a little bit after launch. Whereas with the ETH ETF, it's basically been at parity. There hasn't been that discount for the last, I think, few weeks, maybe month and a half. And so people are a little more hesitant to sell their Grayscale Bitcoin the day of launch. But then, after a few days, the equilibrium started to balance out more, and there was more sell pressure because people didn't want to be paying the fees, and they were no longer taking a haircut. And so what we saw happen with Bitcoin was over the course of, I think, about a month, maybe 5 weeks, there were these regular, pretty much every day, big outflows from the Grayscale trust. It was like this watching game of, is all of that going to be eaten up by the other ETFs? Is it going to be a net inflow? Is it going to be a net outflow? And we saw all sides of the spectrum. There were days where there were massive net outflows because, the other ETFs weren't getting enough inflows. There were some days where it absolutely consumed all the outflows, and there were massive inflow days. And I think that the important thing to take away is that it did end at some point. Eventually, people ran out of this Grayscale Bitcoin to sell, and that sell pressure disappeared. And then it was, mostly buy pressure, people adding to their ETFs. People were occasionally selling from an ETF as well, and reallocating to another one, or just taking some profits or whatever. But it did run out, and the same thing will happen with ETH. I think the ETH Grayscale outflows are, as a percentage, higher than the Bitcoin ones were on day one, and seems likely on day two. And so that overhang will end sooner rather than later. And the other thing I always like to mention when we're talking about like the inflows and outflows is that, generally speaking, most people who invest in ETFs are not day traders. They're not investing to flip on a weekly basis. They are building up a long-term portfolio. They're going to allocate 1% of their portfolio if they're a TradFi investor, or if you're a crypto maxi, maybe you go much higher. But it's usually funds that you're like, I'm going to put in this fund and just hold long-term. If you want to do day trading, quick flipping, then, you have exchanges for that. You have, your own, on-chain activity for that. There's no real reason to trade and flip ETFs because there are fees involved, whereas you could just go and buy and sell on a centralized exchange.
And just one final point on ETH before I want to get into how the market has reacted and what is going on with the Ethereum price and what you expect maybe over the next few weeks, even though I know you don't necessarily have a crystal ball. But just to further on the point that you made, here's a tweet from Eric Balkunas where he's pointing out that the outflows of ETH was about 480 million. One thing that's so annoying, just quickly, I got a bone to pick on this. It is impossible to find exact numbers on these ETFs. Like TradFi is so frustrating. I have to go to Twitter. On chain, I can just pull it up in so many different sources. But with these ETFs, it's like everyone's got their own number. And unless I have a Bloomberg terminal, which I don't, then like I can't figure it out myself.
Let me just jump in there, because even with the Bloomberg terminals, I was reading something about how even more insane it is. You'll look at like some of the numbers from the Bloomberg terminals, and it has like, for some of the ETFs, the inflows are plus 80 million, but the volume is like 50 million. You're like, how does that work out? There's OTC trades that aren't even logged there. And so like, even if you have all this, like, there's still an amount that's like discrepancies. And so it's total chaos.
It's just, it points out TradFi markets are super inefficient. And as a result of inefficiency, it's it's rigging the game towards people who can find their way around that, which that like the biggest players do, which is unfair to everybody else, the little guys, people listening to this show. And also on chain fixes that because it makes it much more efficient. Anyways, it's just you and I could yell and scream about this for a while. But so ETH saw about 5% of its total fund has already gone out in day one. So there you go. We're about 5% already in one day. So you could, if you were, that would be 20 days. If it went 5% per day, tough to predict exactly how long it'll take. But I think your point is there's an end to this, and it's probably less than a month here. And then it's no longer going to have this outflow pressure at this level. Not to say there won't be outflows, because people will sell, especially if the price goes up. On that note, let's talk about Ethereum's price. When the ETF launched, we were around 3,500 for ETH, and now we're down to 32, 30, 33, 3,300. 3,300, just about 33. What's your reaction, how the market has responded?
Up until like the last couple of hours, really, we saw pretty reasonable bullishness in ETH relative to the rest of the market. Like, you'd see Bitcoin dropping and ETH wasn't dropping as much. Whereas historically, Bitcoin drops, ETH and every other token drops more than Bitcoin. Uh, I suspect that has something to do with the ETFs. When you look at charts on a day-to-day basis, though, there's so many factors out of anyone's control that it's really difficult to predict. What caused what? Is this because of the ETFs? Is this because global equity markets crashed and there's a 1.1 trillion wiped off, I think, the US stock market in the last 24 hours, down 3% or something, biggest loss day in a year plus. Probably has something to do with that. And so looking at it on a day-to-day basis, I try not to read too much into it. I think when we come back this time next week and do the show, it'll be really interesting to see what's happening then. Is ETH, like, what's the inflows looking like? Are there outflows? Is it net positive, net negative? How's the market reacted then? Right now, I'm just kind of shrugging my shoulders and going, you know what, there's very little sense reading too much into it right now. Let's just wait and see.
Hold on tight. Before we move on to the next question, I want to take a quick second to give a shout out to our awesome sponsor, CoinGecko API. Every crypto project needs reliable on-chain data. At Milk Road, we trust CoinGecko API for dependable crypto prices for you. And it's not just us. CoinGecko API supplies thousands of crypto projects with comprehensive data, including prices, market trends, NFT data, and on-chain DEX data. Best part, its integration and developer resources make it easy to set up. Friends of the Milkman, guess what? You get a free trial right now. Visit coingecko.com/API and use code MilkRoadTrial today. Okay, on that note, what do you expect for the short term, next week, few weeks? I know you don't have the exact numbers. Nobody knows what will happen, and I think the more important question is, like, what are you doing with your investments and with your portfolio right now? Are there any moves you're making? Or are you just sitting on your hands? What's going on?
Yeah, I mean, like I said, the next week, anybody's guess. I think in the next few weeks, we start to see price slowly tick upwards. We've been chopping for a long time now, and we haven't seen like a significant explosive move up or down. Obviously, there was a bit of a crash and correction a few weeks ago, but it sort of stopped before it got too bloody and dangerous. And I think the longer the choppiness goes on, the closer we get to, the odds increase that we're going to see some sort of significant market shift and trend start to take shape. Whether it is up or down, I'm sort of betting that it will go up at a certain point in this cycle. I don't think the cycle is over. And so I would think within the next few weeks, we start to see some of that. Perhaps it takes a little longer, but there's a lot of bullish catalysts. The ETH ETF is a big one. I still am very bullish on it. The election is coming up. We've got, seemingly both candidates now seem to be more pro crypto than any other election in history. Just general good things coming all around for crypto. So yeah, in a week, who knows? In a month, I'm basically betting that prices will probably go up a little bit, but nobody knows that either. And in terms of what I'm doing, I'm still largely sitting on my hands and trying to like reallocate, balance my portfolio into the majors. A big struggle is dealing with I recently moved back to Australia. We were living overseas for 5 years and finally made the decision that, let's go home. And once we came home, it was like setting up companies and trusts to sort of make sure that we were thinking things through smartly. And, we want to pay our tax, but we want to do it in an intelligent and optimized way that with crypto especially, it can be tricky. And so just making sure that everything is in place properly, working with a tax lawyer, then start doing, moves and trades and stuff. So I'm pretty happily sitting on my hands right now. But I do have this plan and vision to work towards, reallocating more to the majors. And I feel good about that.
When you talk about your plan, uh, one thing that I think you've talked about this before is the importance of writing down a plan. And I've asked our other guests this week what their price prediction is for ETH in this cycle. So I'm going to ask you that same question. But the question that I actually like better than that question is, what's your sell target price? At what price? And maybe this is for you, or maybe this is what you would advise somebody else, because it's very easy to say, oh, I think ETH is going to go to 10K or 15K or 20K, but that's not the point. Is what is the all-time high in this market. The point is making a plan for when you are going to start to sell. And obviously that depends upon when you got in and your cost basis and all those things, but would love to hear your thoughts around that so you can help our listeners start to formulate their plan, because the last thing you want to do is sit through an entire market, watch it go up and then watch it go back down. And a lot of people make that mistake. A lot of people think they need to sell everything all at once. They don't understand that you can DCA out the same way you can DCA in. Give us a full perspective on the way you would approach these next 6-12 months.
Yeah, I was actually at a poker game a couple of days ago and talking to an old friend who crypto came up, and he was telling me how he's recently started, getting into some Sol, getting into some ETH and buying. And it sort of, it became apparent that he was getting pretty bullish on crypto and all that kind of stuff. And I was like, that's great, sounds good. But I was also sort of giving him telling him to exercise some caution, because we're already decently well into this bull market. It's not like ETH is not $600, Sol is not $8. Yes, I do think we have higher to go from here, and you can get like a 2, 3, potentially 4x on some of these big major tokens. But I wouldn't expect a 10x on ETH from here or Sol from here necessarily this cycle. And so in that conversation, I was sort of saying, I think ETH hits 10K, by the end of the decade for sure, by the end of 2030, probably sooner. But if in the next 12 months we start seeing ETH creep up there, probably around the 8K mark, I'm going to be looking to sort of DCA out and start selling positions. Similarly, like if Bitcoin hits 120K, if Sol hits $500, these are just like rough ideas in my head where it's like, that's a lot of gains, and that's time to start taking some risk and money off the table. I've already done a bunch of selling actually earlier this year, when Bitcoin first hit sort of all-time highs. And I think that's like the way people should be thinking about it, where it's very tempting and easy and to fall in the trap of just being a human and getting greedy and thinking, oh, what if it just does another 2x or 3x? Or like everyone is talking about ETH to 10K. So when it hits 8K, of course it's going to hit 10K. It's like, it's so close. And that's when you run the risk of holding everything, and then it gets to like 9,400 and then starts crashing, and you hold all the way down. And so just like you said, you can DCA out. And I highly recommend that to everyone, because you're never going to time the top. You're never going to time the bottom unless you're extraordinarily lucky or you're GCR. Like most humans are not going to time the top or bottom. GCR is a legendary trader who timed the Pico top in 2021. Among other things. And so be human and just sort of like, you don't have to sell your whole portfolio, but let's say you set a price target. It's going to change for everyone. Everyone is different. They're in different financial positions in their life. Some people are totally happy with a 2x. Some people, they can take more risk and they're trying to get a 5x or whatever it is. But once you set down a target, you write it down, you have it in advance, because once you get there, your emotions and other things will come into play. Once you get there, say, I'm going to start taking off, 10% of my portfolio at 8K. If it goes to 8,500, I'll take another, 15% off. If it hits 9K, another 20% off. And that way, by the time it hits 10K, you've taken a lot of profits. If it goes up and hits 15K, 20K, amazing. You've still got a lot of money in ETH and crypto. You haven't sold everything, so you're not missing all the upside. But then if it crashes and goes all the way back down to like 1,500 or 1,200 or whatever, you never know what happens in a crazy bear market. You've at least taken profit, secured money off the table. And again, now that I'm back in Australia, you've got your tax paid for. That's one of the biggest traps that seems to catch a lot of people is you do all this trading, get to the end of the year, you haven't taken profits, price crash. And then maybe because of when you were trading within crypto, you had all these taxable events, and now you have to pay tax on money you don't even have. So be sensible, take profits, DCA out, and set your price targets, because it will change for everyone. The most important thing I found on this front is that set your own price targets. If you're listening to us on this podcast, if you're listening to someone on Twitter and you see a tweet and that's their price target, you're not going to have the right amount of conviction in it. You have to decide for yourself. And you can listen to other people. Hey, this person said this. I like what they say. This person said that. I'm going to, merge these two sort of theories together. And in my head, I think, I'm comfortable with, this number. Write it down and then live by your own rules. Don't worry about what everyone else is doing, because you never know, someone else might have a $10 million trust fund behind them, or someone else might have $100,000 of debt. So one person's selling way too, in your mind, too early, the other guy's holding way too long. So you have to come up to your own mind, because everyone's in a different situation.
Do you have a all-time high price target for Ethereum in this cycle?
This cycle, I think 11, 12K is my, this is the non-conservative cycle. This is where I think if things go really, really well, I would expect us to hit around there. But like I said, personally, around 8K, I'll be looking to start exiting a lot of my positions, especially if I still have significant altcoin bags. Probably that's where, again, who knows what's going to happen to altcoins this cycle, but that's when I think altcoins become even more risky than Bitcoin and ETH, which usually they'll drop in a bear market, but not as much as they're not going to go down 99% like a lot of other things might.
But they clearly have further to fall. And I think that's the other question, and maybe a question that we can talk about on a future show, because we got to wrap up today, but I'd like to see more people talking about what do you think is the range, the bottom of the next bear, right? So, okay, in this bear, we ranged really mostly between 2,000 to 3,000 for quite a while, right? ETH was in that range. Sure, we dipped below 2,000, but 2,000 to 3,000 was
I think we dipped below 1,000 for a bit.
I guess we dipped below 1,000. We were in the 1 to 2 throughout the bear, and then we've been in the 2 to 3 for a while now. So what's our next low, right? Is one thing. I don't know if you've thought at all about that.
I thought about it the other day. Basically, it was do we ever see 3-digit ETH again, sub 1K? And there's a chance, but I think it's becoming less likely by the day. I would say maybe around 1,500 is assuming we hit 8K, 10K this cycle. And that's a big drop. Going from 8K to 1,500, that's, 80+%. So be prepared for stuff like that to happen, because we've seen it time and time again in crypto. Maybe it doesn't drop that much. Maybe it goes to 2,200 after being at 8K. That's still a massive drop. Maybe it goes even lower. It's you never know what's going to happen. Maybe another COVID event hits. Maybe AI super virus releases into the environment, or AI bots come. You just don't know in the world. And so don't be in a situation where you had life-changing money on the table. You could buy a house, you could pay off your debt, you could retire, you could, whatever that would change your life. And you round trip it all because you were trying to get ETH from 8,500 to 10K, thinking, that's another 20%, but you end up losing 80% in the process.
Wise words from Zeneca. Zen, thanks so much for joining us again today.
Thanks for having me, as always.
Thanks, everybody, for listening in. Have a wicked awesome day.
Thank you for listening to Milk Road Radio, the easiest path to get smarter about crypto. If you like this episode, share it and hit subscribe or follow so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, then we'll leave a link to Milk Road Pro as well, your #1 resource to help you invest successfully in crypto. One final note, this podcast is for educational purposes only, and nothing we say is financial advice. Crypto is risky, so you should never invest more than you're willing to lose. Thank you, friends, and we'll see you in the next one.